Kia ora, good morning. Atamaria. It is Monday, the 5th of October. I'm Mike from Markets. This is Kiwibank Markets in a minute. Straight into it this morning. Okay, so two major drivers of market sentiment over the weekend, both stemming from the US, non-farm payrolls, basically employment data, and the health concerns relating to President Trump. He was admitted into hospital after testing positive for COVID. Yeah, so unpacking those drivers, the Trump stuff, not really our bag. We're not a political commentary by any stretch, really just barely a markets commentary. So we'll just focus on the market reaction to the evolving situation. The employment data, that is more our lane. Summarizing, it looks like the pace of the US economic recovery is slowing, at least as far as the employment data is concerned. Fewer jobs than expected were added in October, but the unemployment rate did fall by more than expected, from 8.4% to 7.9%. But a good chunk of that decline attributable to a fall in the participation rate. So, some reasonable numbers, but still some concerns, kind of a meh. Okay, so what did all of that stuff mean? It meant volatility. Did it mean risk off though? Yes and no. From an equity market perspective, that thing we use as a proxy for global risk sentiment, risk was indeed off for the US, at least. The big three indices, they fell by between 0.5% and 2% across the Atlantic. That way. European indices, mildly mixed with a softly positive skew. Kiwi US and currencies, a lot of chop within a 40-ish, 50-ish point range, but the bird ultimately finished on Saturday morning, just a touch below where we left it on Friday afternoon, near 66.3. The other majors relative to the US, choppy. A few made ground, a few lost it, but there was no uniform dumping or buying of the greenback. So just isolating or stripping out the Trump headlines. Usually, or at least more often than not, currency markets have a tendency to overreact to headlines, especially when the underlying information is a bit questionable or imperfect. We saw this play out with Boris Johnson earlier in the year, Prime Minister of the UK, hospitalised for COVID. The pound tumbled because risk off. But what happens when the home currency of the leader in question is a perceived safe haven like the US dollar? It gets tricky. That's probably the only valid answer there. We will discuss this, where the Kiwi might trend this week in light of the weekend's developments. In First View, that is the weekly economic review preview from Kiwi Economics. Email, shout out if you don't receive that, and we will hook you up. Just coming back to the Kiwi, or reviewing the Kiwi. Basically NZD and crosses, choppy, volatile, but not an enormous amount of movement if you look at the Friday night levels and the Saturday morning close levels. Okay, today, Trump headline W3. Watching, waiting, worrying. Arguably, though, of more interest to the local masses. Level 1 decision day for Auckland. We should find out about a move from the current COVID settings at some point today, just after lunch, I think. We have no major data scheduled globally over the coming 24 hours. It's an Aussie dollar holiday today, and it's a holiday in China too. Golden Week, I think that's about enough. Have a great Monday. Kia pai tō rā.